You have been lied to, not by a person and not even by a headline, but by the very numbers flashing on your screen. There is a profound deception woven into the fabric of the modern financial world, a deception so vast and so normalized that we accept it as gravity. We accept that a red line moving downwards means an asset is losing value. We accept that a crash in the price equals a rejection of the thesis. But what if the red line is not a measurement of value, but a weapon? What if the crash you just witnessed, the brutal slam that took silver from the euphoric heights of over $100 down into the bloody trenches of the 80s, was not a market correction, but a message? A message sent from the paper masters to the physical believers. A message designed to break your will, steal your conviction, and force you to hand over the only real wealth you possess. We are standing at a critical juncture in financial history. The events of the last 72 hours are not just another volatile weekend in the commodities market. They are a red alert. They are a siren screaming in the night, warning us that the disconnect between the paper map and the physical territory has reached a breaking point. We have witnessed a slam, a mechanical, calculated, and violent suppression of price that defies the laws of supply and demand. And if you do not understand why this slam happened, and more importantly, why it matters, you are destined to be a victim of it. You are destined to sell at the bottom, driven by fear, while the architects of this slam buy your ounces at a discount, driven by greed. To understand this moment, we must first strip away the noise. We must turn off the television pundits who are blaming interest rates or the dollar index. Those are excuses. They are the cover stories for a much deeper, much darker operation. The reality is that we are watching a war between two distinct markets that are currently forced to share the same price tag. On one side, we have the paper market. This is the world of futures, options, derivatives, and leverage. It is a world of infinite supply. In the paper market, a bank can create 1 billion ounces of silver out of thin air with a keystroke. They can sell promises they never intend to keep. They can flood the market with phantom metal to drown out the buyers. This market is fast, it is loud, and it is ruthless. It is a bully. On the other side, we have the physical market. This is the world of atoms. It is the world of mines, refineries, factories, and vaults. In this world, you cannot print an ounce of silver. You have to find it. You have to dig it out of the earth, crush tons of rock, process it with chemicals, melt it, refine it, and ship it. It is slow, it is difficult, and it is finite. The laws of physics rule this market, not the laws of finance. And right now, the laws of physics are screaming that we are running out of silver. We are consuming more than we produce. The above-ground stockpiles are being drained. The industrial demand is exponential. The slam that we just experienced, the red alert event, was the paper market attacking the physical market. It was the bully trying to intimidate the nerd. The price of silver was rising too fast. It was exposing the weakness of the dollar too openly. It was drawing too much attention to the insolvency of the debt system. So the powers that control the paper levers pulled the emergency brake. They used the low liquidity of the electronic trading session to dump massive amounts of paper contracts. They triggered a cascade of stop-loss orders. They forced the leveraged speculators, the tourists who arrived late to the party, to liquidate their positions. It was a massacre, but it was a paper massacre. Ask yourself this question. While the price on your screen was crashing, did the solar panel factories stop running? Did the missile guidance system stop needing silver? Did the AI data centers switch to copper? No, the physical reality remained unchanged. The demand is inelastic. A solar manufacturer cannot simply stop buying silver because the chart looks ugly. They have production quotas. They have contracts. They need the metal. And so, while the paper price crashed, the physical absorption continued. The slam created a sale for the industrial giants and the sovereign wealth funds. They are the ones buying the dip that you are panicking over. This leads us to the central thesis of this moment. The paper market can intimidate price in the short term, but the physical market will corner the paper market in the long term. This is the inevitable conclusion of a bifurcated system. You can suppress the beach ball under the water for a long time if you have strong arms, but the moment your muscles fatigue, the moment you slip, the ball rockets to the surface. The slam was the paper market flexing its muscles. It was a show of force, but it cost them energy. It cost them inventory. And it ultimately made the physical shortage worse by discouraging mining investment and encouraging physical offtake at lower prices. We need to go deeper into the mechanism of the slam because it reveals the fragility of the entire system. Why did it happen so fast? Why did silver drop $20 in a blink? It is because the market structure is broken. We live in an era of algorithmic trading. The machines that run the market do not value silver. They value volatility. When the price moves too fast in one direction, the risk models of the big banks start flashing red. They force the traders to de-risk. They force them to sell. This selling creates more volatility, which triggers more selling algorithms. It is a feedback loop, a death spiral. This mechanical weakness is exploited by the shorts, the entities betting against silver. They know where the pain points are. They know exactly where the retail investors have placed their stop-loss orders. They know that if they can push the price down just a few dollars, they can trigger a landslide of automatic selling that will do their work for them. They pushed the snowball over the edge, and gravity did the rest. This is not price discovery. This is price destruction. It is a game of hunting liquidity, and you, the retail investor, are the prey. But here is where the red alert turns from a warning into an opportunity. The market has shown its hand. It has revealed that it is terrified of higher prices. Why would they slam the price if they weren't afraid? If silver was truly a pet rock, if it was truly abundant and useless, they would let the price rise and then short it gently. They wouldn't need to smash it with a hammer. The violence of the reaction proves the validity of the threat. Silver at $100 an ounce breaks the narrative. It signals that the currency is dying. It signals that inflation is out of control. It signals that the emperor has no clothes. The slam was an act of desperation. It was a tactical victory for the paper shorts, but a strategic defeat. By lowering the price, they have just made silver more accessible to the billions of people in the global south who are looking for a way to opt out of the dollar system. They have made it cheaper for India to import. They have made it cheaper for China to stockpile. They have accelerated the very trend they are trying to stop. We must also talk about the tourists. The silver market over the last few weeks had become crowded. It attracted people who didn't care about the fundamentals. They just saw a green line and wanted to get rich quick. They bought with leverage. They bought call options. They were weak hands. The market hates weak hands. It shakes them off like a dog shakes off fleas. The slam was a cleansing. It purged the speculators. It wiped out the leverage. Now the market is lighter. The open interest has been reset. The only people left holding silver are the believers, the stackers, the people who understand that this is not a trade, it is a war for the future of money. The red alert is also about the calendar. We are approaching a critical delivery cycle in March. The futures market operates on a schedule. Contracts expire. When they expire, the holder of the contract has to make a choice: take delivery of the metal or roll the contract to the next month. The slam was designed to scare the longs out of taking delivery. If the price is crashing, you are less likely to demand the physical metal. You are more likely to sell the contract and run away. The banks need you to run away because they don't have the metal. If everyone stood for delivery in March, the COMEX would default, the vault doors would shut, the game would end. So they slammed the price to protect the inventory. They sacrificed the chart to save the vault. But this is a delaying tactic. It is not a solution. The metal is leaving the vaults anyway. It is leaving through the back door, via ex-pit transactions and private deals. The industrial users are bypassing the exchange. They are going directly to the refiners. They are securing supply at the source. The exchange is becoming a theater where actors pretend to trade silver, while the real silver is moving in the shadows. This brings us to the industrial reality, which is the bedrock of our thesis. We often talk about solar panels, but we need to understand the scale of what is happening. The world is attempting to re-engineer its entire energy infrastructure. This is not a hobby. It is a mandate. Governments have set net zero targets. To hit those targets, they need to build terawatts of solar capacity. Solar panels require silver paste. There is no commercially viable substitute that offers the same efficiency. If they switch to copper, the panels degrade faster and produce less power. In a world starved for energy, efficiency is everything. The thrifting argument that they will just use less silver has hit a wall. You can only make the silver paste so thin before the physics breaks down. We are at the physical limit of thrifting, and even if they manage to save 10% per panel, the volume of panel production is growing by 20 or 30% a year. The math leads to one conclusion: a structural deficit that cannot be closed by mining. Mines take 10 years to build. You cannot just turn a dial and produce more silver. The geology is unforgiving. The grades are falling. The easy silver has been mined. We are now digging deeper for less metal at a higher cost, and many of these mines are in jurisdictions that are becoming increasingly unstable. Mexico, Peru, and other major producers are facing political and social challenges that threaten supply. So we have soaring demand crashing into a rigid, fragile supply chain. This is the definition of a powder keg. The paper market can paint over this reality for a week or a month. They can paint the chart red, but they cannot paint atoms. They cannot print solar panels. Eventually, the physical shortage manifests as a force majeure. A factory shuts down because it has no silver. A mint stops selling coins because it has no blanks. A delivery fails. When that happens, the paper price becomes irrelevant. The price of silver becomes unobtainium. The slam we just witnessed is likely the last chance to board the ark before the flood. When the real squeeze happens, when the industrial panic sets in, there will be no red candles. There will be no dip to buy. There will be a vertical line to infinity. There will be no offer. You will call your dealer and they will say, "I have no silver to sell you at any price." This is why the red alert matters. It is a wake-up call to get your house in order. If you were waiting for a pullback, this is it. If you were wondering if the volatility was over, this is your answer. No, it is just beginning. The dying gasps of a fiat currency system are violent. The dollar will not go gently into that good night. It will rage. It will wreck markets. It will destroy wealth. The volatility is the weapon the system uses to shake you out of the life raft. You have to be mentally hardened against this. You have to expect the slams. You have to welcome them. When you see the price drop $10, you should not feel fear. You should feel contempt for the manipulators and gratitude for the discount. You should be like the predator, not the prey. The predator waits for the wounded animal. The market is wounded. It is bleeding leverage. It is bleeding credibility. We also need to talk about the psychological warfare component. The media plays a crucial role in the slam. Notice the headlines. When silver rises, silence. When silver crashes, it is front-page news. Silver bubble bursts. Commodity supercycle dead. They want you to feel foolish. They want you to feel isolated. They want you to think that you are the only one crazy enough to hold a barbarous relic. This gaslighting is intentional. It is designed to herd the sheep back into the pen of paper assets, stocks and bonds. But look at who owns the media. Look at their incentives. They are part of the fiat system. They survive on debt and advertising from financial institutions. They are not going to tell you that the money is broken. They are not going to tell you to buy the asset that destroys their business model. You have to look past the headlines and look at the actions of the smart money. What are the central banks doing? They are buying gold at record paces. What are the billionaires doing? They are buying farmland and commodities. What are the tech companies doing? They are securing strategic mineral reserves. Watch what they do, not what they say. They are accumulating hard assets while telling you to buy paper. The slam allows them to buy more. It is a wealth transfer from the public to the elite. By holding through the slam, by refusing to sell, you are disrupting that transfer. You are engaging in an act of financial rebellion. The red alert is also a signal to check your strategy. Are you over-leveraged? If the slam wiped you out, you were gambling, not investing. Silver is a long-term hold. It is a generational asset. It is not a slot machine. If you are using margin, you are vulnerable to the algorithm. The algorithm hunts margin. You must own your position outright. If you own the physical metal, no margin call can touch you. The price can go to zero on the screen, and you still own the ounces. You still own the conductivity. You still own the history. This distinction between price and value is the armor that protects you. Price is what you pay. Value is what you get. The price of silver dropped this weekend. The value of silver did not. In fact, one could argue the value increased because the lower price will stimulate more consumption and drain the stockpiles faster. The cheaper it gets, the quicker it runs out. The lower the price, the more explosive the inevitable rebound. We are seeing a divergence in the premium market as well. While the spot price crashed, did the price of silver eagles crash by the same amount? No, the premiums expanded. The dealers are not stupid. They know that if they lower their price too much, they will be cleaned out of inventory. So they defend their stock. They raise the premium over spot. This decoupling is a sign that the physical market is rejecting the paper price. It is the real market saying, "We don't believe you." When you see spot price down and premiums up, that is the most bullish signal imaginable. It means the paper market is losing its grip. It means the tail is no longer wagging the dog. The dog is waking up. The dog is the physical market. And when the dog decides to move, the paper tail will be whipped around violently. The future of silver is not just about money. It is about civilization. We are moving into a high-tech, automated, electrified future. That future is built on silver. Without silver, the satellites go dark. The solar fields stop generating. The electric cars stop running. The medical devices stop working. Silver is the essential element of the 21st century. It is the indispensable metal. The idea that it can be priced at $20 or $30 or even $80 an ounce is an absurdity. It is a temporary glitch in the matrix. The slam was an attempt to maintain that glitch, to keep the illusion alive for just a little longer, to keep the masses asleep, but you are awake. You are watching this. You know the truth. The red alert is not a sign to flee. It is a sign to fortify. It is a sign to double down on your conviction. Let's look at the historical precedents. In the 1970s, during the great gold bull market, there were crashes of 20, 30, even 40%. They were brutal. They shook people out. But those who sold missed the final move that multiplied their wealth by 10 times. In 2011, we saw similar volatility. The nature of a parabolic bull market is that it tries to buck you off. It is a wild horse. It kicks. It jumps. It slams you against the fence. Only the riders who hold on tight get to the finish line. The crash of 2026, the one we are living through right now, is one of those kicks. It is a test of your grip strength. If you let go now, you will regret it for the rest of your life. You will look back at the chart in 5 years, see the dip, and say, I had it. I had the winning lottery ticket, and I threw it away because I got scared. Do not be that person. The red alert also signifies the acceleration of time. Events are moving faster. The crashes are deeper and faster. The rallies are steeper and faster. The system is becoming unstable. We are approaching a singularity, a moment where the old rules stop working entirely. In this chaotic environment, you need an anchor. You need something that is not someone else's liability. Silver is that anchor. Consider the geopolitical dimension. The BRICS nations are actively working on a new payment system backed by commodities. They are hoarding gold and silver. They know that the weaponization of the dollar has made paper reserves dangerous. They want assets that cannot be frozen. The slam in silver prices is a gift to them. It allows them to exchange their trade surplus dollars for hard assets at a better rate. We are literally selling our strategic future to our geopolitical rivals for pennies on the dollar. It is strategic suicide masked as financial manipulation. The slam also exposes the incompetence of the regulators. Where is the CFTC? Where are the watchdogs? They watch the price crash on massive volume during a time of illiquidity and say nothing. They are captured agencies. They exist to protect the status quo, not the investor. You cannot rely on them to save you. You cannot rely on the government to protect you. You must protect yourself. You must be your own central bank. Being your own central bank means holding reserves. It means managing risk. It means ignoring the propaganda. The red alert is your signal to audit your vault. Do you have enough? Is it secure? Do you have cash on the sidelines to take advantage of these dips? The slam is a stress test for your personal financial fortress. If you felt panic this weekend, your fortress has cracks. Fix them. The narrative of demand destruction is another lie they tell during a slam. They say, oh, the economy is slowing, so industrial demand will fall. This ignores the reality of the Green New Deal and the global infrastructure push. These are government-mandated programs. They will print the money to build the solar panels even if the economy is in a depression. In fact, they will build more infrastructure during a depression to create jobs. The demand for silver is policy-driven, not just consumer-driven. It is backed by the printing press. So we have a convergence of forces: monetary debasement, industrial necessity, geopolitical hoarding, and a structural supply deficit. Against this, we have a paper market that plays games with leverage. Which force do you think will win in the end? The paper tiger or the physical reality? The answer is obvious. The timeline is the only uncertainty. The slam buys them time. It buys them a few weeks, maybe a month. It allows them to cover some shorts. It allows them to manage the optics, but it does not create silver. It does not open new mines. It does not stop the debt clock. It is a Band-Aid on a gunshot wound. As we move forward from this red alert, we must adopt a new mindset. We must become volatility veterans. We must expect the price to swing wildly. We must stop checking the price every hour. We must look at the fundamentals every month, not the tick chart every minute. The fundamentals are the compass. The price is just the weather. The weather can be stormy while the compass points true north. True north is higher silver prices. True north is the collapse of the purchasing power of the dollar. True north is the remonetization of gold and silver. Stick to the compass. Ignore the storm. The slam matters because it is the final confirmation that we are right. If we were wrong, they wouldn't care. If silver was worthless, they wouldn't manipulate it. The intensity of the attack proves the value of the target. They are attacking silver because silver is the Achilles heel of the debt system. It is the truth teller. And in an empire of lies, the truth is treason. You are holding treason in your safe. You are holding the evidence of their failure. Wear that as a badge of honor. You are part of the resistance. The red alert is the enemy firing at you. Do not retreat. Dig in. The coming weeks will be crucial. We will see if the paper market can hold the beach ball down. We will see if the industrial buyers step in and drain the COMEX. We will see if the tourists return or if the stackers take control. It is going to be a battle, a grind, a war of attrition. But you have the ultimate advantage. You can wait. It costs you nothing to hold physical silver. It costs them billions to suppress it. Time is on your side. Entropy is on your side. The mathematics of exponential debt are on your side. So let the red alert ring. Let the sirens wail. Let the paper traders panic. We will sit quietly. We will watch. We will wait. And when the dust settles, when the paper burns, when the illusion fades, we will still be holding the metal, and the metal will be the only thing left standing. This is why the slam matters. It is the darkness that defines the light. It is the lie that proves the truth. It is the necessary pain before the birth of a new monetary paradigm. Do not fear the red alert. Embrace it. It means we are winning. It means they are desperate. It means the end of the game is near. Hold fast. Stay the course. The physical reality is coming for them, and it is coming with a vengeance.